we have provided smartphones and additional financial services to over 5 million everyday earners across the continent, across Kenya, Uganda, Nigeria, Ghana, and most recently South Africa. The entire origins of the business and the continued focus of the business is using a principle of no trade-offs. The principle is we can help make everyday earners' lives better, or in M-KOPA we say make progress in their lives with the financial access and the digital access, while at the same time building a business that will be more than sustainable, will be profitable, and it will provide adequate returns to shareholders and lenders. So the pursuit is very much on both sides at the same time. Fundamentally, if we're not making people's lives better, we're going to be out of business in a minute.
I'm JB Wogan from Mathematica, and welcome back to On the Evidence. On this episode, Jesse Moore explains the business model and mission of M-KOPA, the global fintech company he directs and co-founded that provides smartphones and financial services to low-income and unbanked workers across the African continent. Jesse spoke with Mathematica's president and chief executive officer, Paul Decker, in December of 2024 during Paul's visit to Mathematica's offices in Nairobi, Kenya. M-KOPA, which is headquartered in Nairobi, provides financing to everyday earners in Kenya, Uganda, Nigeria, Ghana, and South Africa, so that these workers can afford smartphones. For these everyday earners, the upfront cost of a phone would take months, if not years, of savings to afford. And yet, the technology is critical in today's economy for building a business. Everyday earners, in case you're wondering, are people who have regular but informal work, and they include hairdressers, motorcycle taxi drivers, farmers, and carpenters. Once these workers have smartphones, they're able to build credit and access other services such as insurance and savings accounts. M-KOPA's customers do not have conventional salary jobs with regular paychecks at the end of each month, so they are typically unable to open a bank account or put down a deposit on a business asset like a smartphone that they would pay for over time. Paul and Jesse talk about balancing a company's social mission with its need to earn a profit, and the advantages of pursuing social causes through a for-profit company that can scale up and adjust strategy based on customer feedback. They also talk about how M-KOPA uses evidence to understand how its products and services are generating benefit to customers. If you're new to Mathematica's On the Evidence podcast, welcome, and please consider subscribing. More information on how to subscribe on your podcasting app of choice is available at mathematica.org/ontheevidence. I hope you enjoy the conversation.
Jesse, welcome to Mathematica's On the Evidence podcast. I'm fascinated by your organization, M-KOPA, but first I'd like to know more about your background. How was it you came to develop an interest in global development, and how did you get interested in providing access to financial services and digital access as part of those efforts?
Sure. Well, first, thank you for the invitation and the time to tell our story. From my own personal side, I grew up in Toronto, in Canada. Definitely wasn't in my life plan to move to Nairobi and build a Pan-African business, but I'm so thrilled and charmed in the way that it's all developed. The long story short is that as I finished undergrad, I was very fixated on working in the development space. I thought potentially joining the United Nations or a large international NGO was sort of the pinnacle of what I would want to do. I did work for a leading international charity for a number of years in my 20s, but I was a little bit frustrated in that work, in particular because I saw that the beneficiaries we were trying to help didn't have a lot of power and choice. There wasn't a relationship whereby they could vote with their, shillings or dollars and sort of inform us as a charity of what was really valuable. And everything wasn't inherently scalable because of the lack of a for-profit model, which isn't, I'm not trying to say there isn't a huge need for conventional development and charity. There is, but my interests were gravitating much more towards private sector solutions that could enable positive change at the same time as being profitable and therefore infinitely scalable.
Use the market to help.
Yeah, and again, you can't do that in every context, but you can in some. And the context where it seemed to me in my 20s very, very sort of opportune was when technology and innovation was applied. Anyway, let me fast forward to 2005 or 2006 when I was in Kenya working for this charity. And I met a bunch of farmers who we were helping access markets, and the farmers had all recently gotten mobile phones. And that was a big aha moment for me as a Canadian, probably 27 at the time. My parents back in Toronto in that same year didn't have mobile phones, and here were farmers in the middle of the rural countryside of Kenya who did. And it just was an illustration of the leapfrog nature of that technology. And for these farmers, they were very clear that this was taking them from an information void to, and this wasn't a smartphone, this was just a basic mobile phone, but the ability to call markets and find out what the pricing would be, or the ability to get some predictive weather information, or to contact. And one guy said, look, my mother is quite ill, and every Sunday I spend a significant amount of my income taking a bus to go see her and make sure she's okay and then coming back. Well, now he could call her every single night for a fraction of the cost and check on her well-being. And anyway, the particular engagement that day with a bunch of farmers here in Kenya led me to realize how powerful mobile technology could be for them. And from there, I decided to switch my career path and go to do an MBA in order to pivot into the private sector, but with a big interest in telecoms and this continent. So I was up at Oxford in the UK for the MBA, and as it happens, 45 minutes down the highway from Oxford is Newbury. Newbury is not a big, well-known city in the UK, except for the fact that it was the global home of Vodafone Group. Mm-hmm. And Vodafone Group still has a major shareholding in a number of African telecoms operations, including Safaricom here in Kenya. So I sort of badgered my way into a job after the MBA and ended up back here in Kenya to help work on a product called M-PESA. And for those who are unfamiliar with M-PESA, the quick story of that is it was created by my now co-founder in M-KOPA, but a wonderful team headed by a guy called Nick Hughes. And what they purported back in 2005-06 was people who got simple mobile phones, not smartphones, might need and want to be able to send money to each other through text messaging. And that took off in a big way here, and I was privileged to be able to work on that for a little while. So those are the whole beginnings of my career, moving from a development, sort of classic development career path towards innovation and technology and business approaches, and then got a lucky break really working on M-PESA for a few years, and that led us to start M-KOPA in 2011.
So 2011, you said. So tell our audience what it is that M-KOPA does.
Right. Well, what M-KOPA does today is we finance smartphones to everyday earners. Everyday earners being the largest, by far and away, the sort of majority population of the African adults. Everyday earners meaning that they do not have a conventional salaried job, and there's no paycheck that comes on the 30th of the month or the 31st of the month. That does not, however, mean that these folks don't make an income. They make a significant trade, but in, day out, informal work. That could be being a motorcycle taxi driver. It could be being a hairdresser. It could be being a carpenter. It could be being a farmer. And what we do as M-KOPA is help those individuals afford a smartphone, which in 2024 is almost now a critical piece of technology to engage in economic activity, right? So back to those use cases, if I'm a motorcycle taxi driver, I need a smartphone to be on applications to hail rides. If I am a hairdresser, I need to be keeping up with the latest styles and trends on social media, and marketing myself to my customers through social media, et cetera, et cetera. It might sound weird, like, well, smartphones are available, they're kind of ubiquitous, yes, but they do cost, even at the lowest end, $100 or more upfront. And if you are an everyday earner, amassing $100 is an extremely difficult task. Right.
So it's a major hurdle.
It's a major hurdle. It's the equivalent of almost the equivalent of putting down a deposit on a home in the North American context. It takes months and months, if not years, for an everyday earner to be able to save $100 or $200 to buy that asset.
And you can't just go into a bank because you don't have the documentation of a stream of income.
Exactly. So the second part of the equation is, okay, I don't have a lot of cash because I'm earning and spending daily, conducting my business. And again, I'm getting by. I'm making enough money to pay my rent. I'm making enough money to buy food. I can hopefully cover the cost of my kids' education, but it's difficult to save, and I don't have access to credit. And I don't have access to credit because I don't have a job with a normal pay slip. And that's sort of the rails that banking is based on, right?
Yeah.
Banking is predicated on, hey, we see that Jesse has a contract to be the CEO of M-KOPA and he gets paid a salary, and here it is, and then we can lend against that as our security. Well, what happens when you don't have that security? And back to the beginning, that is 90% of the adult population on the continent. So the fundamental problem and opportunity is that 90% of the population does not have a salary and therefore doesn't have conventional financial services. We have invented a way to change that by bringing financial services to everyday earners. And it starts with that smartphone. So the smartphone is something we finance over 6 to 12 months rather than paying for it up front, in order to give people the tool that helps them make more money. But as we are financing them that smartphone, we're also building a credit score for the first time on that customer. And that credit score can then be used with the phone to enable the cross-selling of additional financial services like insurance and savings and more. And so today, we have provided smartphones and additional financial services to over 5 million everyday earners across the continent, across Kenya, Uganda, Nigeria, Ghana, and most recently South Africa.
So it's a big effort.
Yeah, it's a big company these days.
Yeah.
Some interesting stats. Let's take yesterday for example. Yesterday we sold about 7,000 smartphones to people across those 5 markets. And what's, I think, quite special about those 7,000 people is we didn't know them in the morning. When we got up as a company, we didn't know who the 7,000 everyday earners would be that we would enlist, and we didn't need to credit score them because, again, there's no available predictable data upon which to credit score them. What we do every single time is get solid KYC data. So every customer who buys a phone with us yesterday would be submitting their identification. We would take a photo of their ID, cross-reference that with the national bureaus and whatnot. So we know who the individual is. But what we don't know is whether they are creditworthy, because nobody knows whether they're creditworthy. So we take a bet on 7,000 people a day, issuing them a smartphone as a way to then build a business later, selling them additional financial services through those devices. Also yesterday, we sold about 7,000 other financial services through the phones that we've sold. Right. And the last stat that's really cool about M-KOPA these days is, again yesterday, we were paid more than 1 million times on the day, which is 12.5 times per second. So as we've been talking here for the last 5 minutes, we've already been paid, another thousands of times, because you've got all of these people with their smartphones making daily payments for their phones and their financial services, and every morning getting up and making that choice and saying, yeah, it's worth another 30 cents or 50 cents or whatever their particular package is to pay for this device and build that credit score with M-KOPA.
So just to try to help expand understanding of the population you serve, can you just give a little vignette about what a typical customer might look like? What's their profile?
Yeah, happy to talk about Lydia. Lydia is a typical customer of ours who works as a food vendor. She basically prepares porridge and sells that door to door in Kibera. I point this way because Kibera is roughly a couple of miles behind us. Kibera is one of the larger low-income slums in Kenya, and Lydia has her house. I've been there. She's got a sort of a simple house she lives in with a kitchen off the side of it, and that kitchen is for her commercial purposes, where she makes this porridge and other foods, and then she'll sell it door to door in her community to businesses and schools and to families and whatnot. And so in her case, again, not banked, but making an income of a couple $100s a month selling porridge, so probably yielding $4 or $5 a profit per day, trading that food door to door. Until a few years ago, she would have done that just by word of mouth, but increasingly she wants to be on or through a smartphone on the internet, on social media to connect with potential customers. And so the smartphone that we were able to finance her, got her through that important digital gap, and now she's on the other side making more income. And then again, Lydia wouldn't typically have access to financial services from banks because she's sort of off the radar. Well, through her phone, Lydia has been able to acquire health insurance that can cover her and her children in the case of an emergency, or she needs to go to the hospital. What happens in that case is Lydia, who might be paying, say, 50 cents to access a smartphone, can then spend another 5 or 10 cents a day to get an insurance bundle built into that. A new product that we're just rolling out at the moment is also to help Lydia get airtime and data for her phone more cheaply than she can otherwise. To unpack that, Lydia doesn't have a contract with the phone company because the phone company can't give her a contract because, again, she doesn't have a credit score. And so what that means is Lydia will be buying her megabytes day in, day out, even hour by hour, and doing that on a prepaid basis. So, hey, I wake up this morning, I'll send 25 cents to get whatever, 50 megabytes to run my business until lunchtime, and then I'll use some of my earnings at lunchtime to buy another 25 megabytes or 50 megabytes. That's fine, but it's very expensive to prepay. And so we have been able to establish a way to effectively contract her to a daily amount of 25 cents, but she gets, significantly more data because of the commitment she's making, and we're doing the underwriting. So it's, in a way, it's creating what everybody, or not I should say everybody, but most folks in the United States would understand to be normal, which is I get a contract for a smartphone. I don't pay for it all up front, right? When you get your iPhone 16, you don't shell out all the cash. It's bundled into a 2-year contract with Verizon, whoever you're with. Those dynamics have not taken hold yet in Africa, at least for everyday earners, because of the lack of credit scoring and the lack of a salary. We've basically been fixing that with a prepaid approach for the Lydias of the world to get cheap and affordable communication services as well as financial services.
Is there competition in this market? Are there other organizations that are providing similar services?
They're coming. Yeah, they're coming. It makes sense, and the market's huge. So we have acquired about 2 million new customers this year, which it is a big number, but it's a small number relative to well over 100 million people on the continent every year who could use those services. So I would expect you're going to see others doing it. The challenge, however, in building the business is all of the credit analytics that one needs to amass and perfect in order to get them funding to then run the business, because it's an expensive, or it's a cash-intensive proposition. Back to yesterday, if we issued 7,000 smartphones to people we don't know, that's putting millions of dollars out the door in the form of hardware, right? And so how you get those millions of dollars to buy the phones to then put them out is quite a pickle. And it's taken us a decade or so to build the credit analytics to be able to go to major financial providers like banks and get them to provide us with significant amounts of capital to then turn into the phones that lead to the users. In our specific case, our big lending partner for the business is Standard Bank. Standard Bank is the largest bank on the continent with operations across, I think, 18 markets. and they currently lend to us over $150 million worth of capital in the local markets where we operate in local currency. And it has been a journey for Standard Bank and for M-KOPA to grow together based on clearly a big market need, but a pretty unconventional credit approach. It has taken time and effort and scale for us to be able to build the credit engine underneath the hood that gives the bank comfort to lend that sort of scale of commercial capital against the opportunity. And so, to answer your question a little bit more simply, yes, there will be competition. There should be competition because it's a big space, but we're all rate limited by insufficient amount of capital to meet the need across the continent today.
And you mentioned an advantage for your organization is having built a lot of the engine underneath and having strong partners and influential partners in that market. Are there other things that you think are important in your mind for setting M-KOPA apart from those that might compete?
Yeah, I think in addition to the credit analytics and the challenge of getting significant commercial scale behind you, there's two other things we do that might surprise people. So everything we've talked about so far has been credit and analytics and data and millions of payments a day. That's great. That's kind of the software and sort of data side of our business. But to get there, we have to do two other things quite well, which are far more operational than some people would expect. The first thing we do is we build our own smartphones here in Kenya in what is the largest assembly factory on the continent. We do that because it's the lowest cost way to get smartphones out into the market and into the hands of Lydia. We want to make sure we cut down the cost of that device as much as we can while still preserving good quality. And one of the ways in Kenya that can be done is by localizing the assembly, creating jobs. And we now have an ISO 9001 certified, beautiful factory with nearly 400 employees making millions of phones a year. That's not what you might expect, hearing from this credit and analytics business that it's running a huge smartphone brand and factory, but that is indeed what we do. The next thing we do is a very unique distribution. Again, you might think, well, I don't know, don't people just order these online and you ship them by Amazon? Well, no, people don't have a smartphone to begin with, so they're not ordering online. And we've even gone so far as to realize that conventional bricks and mortar distribution to sell through, your phone stores or your supermarkets or whatever, that's quite expensive. And it doesn't also get to Lydia because where Lydia lives, there aren't gleaming, malls with lots of smartphones on the shelves. Okay, so how have we solved that? Well, we have created Africa's largest distribution sales force, which is today over 30,000 people strong. And that's 30,000 people who sold devices to their friends, family, and community last month and got paid a commission by us to do that. So we sell through agents because there's an abundance of people looking for a way to make an income. And this is a good way to do that. You don't need any qualifications. You don't need to have a high school diploma. We will take anybody in, train them, and give them the chance to go become an M-KOPA salesperson, similar to kind of an Avon lady sales model, for if you know that story. But we also do it because it's cost effective. We also do it because it gets the products right out to Lydia. So Lydia may have actually purchased her smartphone whilst she was cooking in her in her kitchen off of her house in Kibera, because our agents can actually come to her to sell her the device in her place of work. And then the last thing is we are able to leverage a little bit of credit sort of know-how, even informally, from those agents, because the agent who sold to Lydia, who I believe in this case is called Jane. So Jane sells to Lydia partly because she knows who Lydia is and she believes Lydia is going to be a good customer, and Jane then gets paid partly based on the performance of Jane over time. Right. For those who know microfinance, and I know it's probably very familiar to you, microfinance as an industry, and sorry, breaking for your audience, what does microfinance mean? Microfinance basically means banking applied to the underbanked population in parts of the world like Africa. A lot of the fundamentals of microfinance have been based on social and community, sort of capital and networks that are, again, a bit off the radar. And so we've cribbed from those playbooks of conventional microfinance and realized that our agents can probably best pick the right customers for M-KOPA. And so those 7,000 people a day, while we don't know them, our agents know them, and that helps us with the overall credit quality.
Yeah, yeah. It's an effect in addition to the screening process.
That's right. So
Get
back
you
to
the right customer base.
That's right. So back to what M-KOPA is today and all the things we have to do. We're running the biggest smartphone factory in the continent, to then put phones into the backpacks of the biggest sales force in the continent, to then go and find 7,000 Lydias every single day who we will issue a smartphone to on credit, which in turn is, to our knowledge, and certainly in our sector, the largest balance sheet, the largest sort of lending operation in Africa, over $250 million currently outstanding. And last but not least is the cross-selling of additional financial services, which is now moving at a clip of over 1 million products per year. So it's quite a large business in some ways, 4 in 1, but vertically integrated in a way that creates a lot of sort of execution advantages for us, as well as helps us balance our profitability and margins while giving customers a really good value proposition.
Customers and others involved in that vertical chain, that your social impact is not just the services provided at the end of that, but it's the jobs that you provide in the production of the phones, the employment of the agents to provide that service.
I'm glad you mentioned social impact. So we've talked a lot about this so far as a commercial entity, but the entire origins of the business and the continued focus of the business is using a principle of no trade-offs. The principle is we can help make everyday earners' lives better, or in M-KOPA we say make progress in their lives with the financial access and the digital access, while at the same time building a business that will be more than sustainable, will be profitable, and it will provide adequate returns to shareholders and lenders. So the pursuit is very much on both sides at the same time. And we do a lot of deep research every year, and we issue an annual impact report publicly that looks at the ways that our products and services are generating benefit, and importantly where they're not, right? Where we have to get better in terms of impacting our customers. But fundamentally, if we're not making people's lives better, we're going to be out of business in a minute, right? I often remind myself and our team that we could wake up today and expect that we're going to get paid 1 million times, right? Most days we're getting paid, as I said before, about 1 million times. It's about $1 per payment. So we're getting about $1 million in every day. But there's nothing stopping those 1 million people from waking up tomorrow and deciding not to pay us. There's not much we can do about that. There's no repossession. There's not a sort of super robust credit bureau to report people to. We don't really have a stick there. So we're relying on people waking up tomorrow and deciding to put their hard-earned money into their M-KOPA proposition, right? And that's been one of the hardest parts of our business, but in the long term, I think one of the best parts of the business model design is that fragility, right? Is the fact that if people woke up tomorrow and they're like, "You guys aren't worth it," we will know, right away that they are voting with their fingers or with their feet not to pay us anymore. It's kind of, from one of the business school classes I remember finding very instructive was the Toyota assembly line, case study where there were so many points of fragility on the line, and any single worker could pull the end on cord and say, yeah, this mirror isn't quite right, this tire isn't quite right, whatever. And that fragility was very frustrating for a while, but ultimately led to Toyota having much better quality. I kind of think of the quality assurance along that line as having similarities to our customer repayments. And again, if somebody wakes up in Lagos tomorrow morning and is like, I don't feel like I'm getting good value from M-KOPA anymore, they can just walk away and we don't have a lot of recourse.
Underlying a lot of the discussion here around your organization is the use of data and evidence. And it threads through every aspect of the organization, I presume, from what you've described. It threads through how you decide to make decisions around products and offerings that are brought to market. It underlies the operations of the model that you've described. And it also underlies, as you pointed out, measuring your impact. So I'm interested in kind of your perspective on the use of data and evidence and how you think about how you've managed that uh, in a creative way to drive the business, to make key strategic decisions, and to demonstrate the impact that you have.
Yeah. Well, I tend to think about data as a commonly used term these days, and for good reason. Um, Sometimes to me the data is ultra simple and like doesn't need much computation, and other times it's extremely complicated and requires loads and loads of computation. And both of those need to be done well in, at least in our organization, for us to succeed. Sometimes it's sort of very simple, stuff that matters, and sometimes it's very complicated stuff that matters. And we need to respect both of those sides of the data equation. To give you the simple one, as an example, we only started financing smartphones 5 years ago as a business. We were financing other assets prior to that, and so a lot of people say, "Well, what was it that led you to decide to finance smartphones in 2020?" And the simple data was, well, we called 1,000 of our customers and we just asked them what it was they wanted. And the majority of the people said smartphones. And so that was the data we needed, right? It was, a sample size and very straightforward. So that, like, and in a way, that's probably the most powerful data we've ever received, because it turned into the commercial strategy, which is now so huge. So that's simple data where you just, don't want to miss the forest for the trees. On the other hand, the complex data is probably the best expression of this is our cash flow projection model, which is the model that underpins all these big lending relationships with banks. And that cash flow projection model is built on the million payments plus that come in every single day across millions of users, and basically sit in a massive machine learning sort of model that is constantly retraining and retraining. And basically what it's doing every day is it's looking at the payments from what we call cohorts. Our cohorts are defined as the people who bought the smartphone today versus yesterday versus the day before. So we've got hundreds of cohorts going back, for the past 5-6 years. And all of those cohorts have then thousands and thousands of payments every day, but there's instructive patterns that emerge if, the cohort of January 1st, when it comes to what's today, November, or no, we're in December now. So anyway, 11 months later, there's a certain expectation of the cash flows that should come from that cohort. And that can be compared against all the other cohorts that ever existed. So I can't get my mind around how complicated and big that machine learning model has to be to do all that computation and ultimately tell us, how's the cohort that we sold to today going to perform, which is what we wanted to do. But that's an example where, the complexity and the data richness of the machine learning model, and the great data scientists that we have in the company who are building and optimizing that model, also create significant value.
Jesse, I appreciate what you're telling me about the use of the data in your organization, how critical it is to your operating model to use those data for predictive analytics that support the model. Thinking about that brings me to AI, and thinking about kind of what the role of AI is in running your organization now, and also about kind of how you're thinking about AI as a tool to leverage the ability to serve underserved communities more effectively going into the future.
Yeah. Well, look, I think we've been ahead, or I think we've done pretty well so far in leveraging AI for computation and for analytics. So the data science team that's built, our major credit models have been, using pretty advanced machine learning practices for several years, and so that has to continue. But ultimately, what we're doing there is taking a lot of payment data points on customers who haven't had credit histories and building credit histories for them as quickly as we can, right? And that's very powerful. Where we're still early, I think, in AI is how to use it for the most efficient service delivery to our customers. 40% of the customers who we sell smartphones to have not had a smartphone before. And if they're going to struggle in any way with the utilization of that smartphone, that's going to be a credit problem for us, because if they're not getting the value out of the phone, well, why are they going to pay for it? And so we have a natural bias to want to make sure people are getting whatever support they need to use the device successfully, make them an income, and be able to pay for that device. I suppose the most obvious opportunities right now are to use bots to sort of automate a lot of the standard queries and customer service responses, and being able to do that with bots should ultimately be a lot cheaper for us, and so it can keep our cost to serve our customers low. I think there's probably other ways, and many organizations are grappling with this now, but how can you utilize AI to improve your HR and your legal and your finance, and just standardize a lot of the reporting and a lot of the contracting and whatnot. So we're beginning a process now with our friends at Microsoft, who've been long-term technology partners for us, in how to deploy Copilot and these other tools inside the business to make us more robust. For me, it's very important as we scale geographically, right? We're in 5 markets today. We aspire to keep adding markets every year or two as we go forward. And if you can assume that you can go to the next market with the rails of the business, the operating rails really well developed. Part of that's our own software stack. Part of it's the sort of data and the KPIs that we expect managers to focus on. But some of it can also be the AI kind of support rails that I think can automate and risk mitigate a lot of execution. That feels to me like a really good investment for a business that wants to be across dozens of markets in the long future.
Yeah. Looking out to the future of M-KOPA, we've talked a little bit about, or we were talking before off camera, about a development of an e-bike business. And I wonder both how that's going, but also what are the other businesses that you are ruminating about that might come out in the future?
Yeah, so you're right. We have a subsidiary sort of business called M-KOPA Mobility. And M-KOPA Mobility has been in R&D for the last couple of years, but is now coming into early commercial scaling. The idea was take the same approach to financing a smartphone to financing an electric motorcycle. Electric motorcycles, or motorcycles generally in this market, are the people and cargo movers. So there aren't a lot of cars, but there are a lot of two-wheelers because they're cheaper, and they also get into the muddy and some somewhat smaller roads that lead to people's neighborhoods, like where Lydia lives. And so motorcycles are the people and the cargo movers of the continent. The opportunity is to electrify them, not only because it's a huge win for the environment and for public health, but they are more economical over time, right? If you don't have the running costs of petrol and you flip to electric, you're going to make your money back within 18 or 24 months. Hence the financing requirement. As with all electric cars, they're more expensive up front than petrol or diesel, but they pay back over time. And so what we decided to figure out is, can we be a financing partner to the everyday earner, probably a motorcycle taxi driver, by financing him or her a electric bike that saves them money. And so after a couple of years of R&D, this year we've now got to over 2,000 electric bikes on the road, which represents nearly half, I think, of all the electric bikes in the country, which is great. It is still quite small relative to the addressable market. And what's happening right now in Kenya is a combination of positive government policies to help stimulate electric vehicles as a category, plus the development of OEM providers who are making electric bikes that are fit for purpose for the African roads. And we're there effectively as a financing and distribution partner to get those bikes out, and then doing the same thing we've done with credit analytics on smartphones and other products historically, which is build an evidence base and a database that proves that the repayments will come over time, so that then big financial institutions can bring their millions of dollars behind it to buy the stock and scale the business.
So you've had a lot of success with M-KOPA uh, during the time that the company's been in operation. Is there perhaps one lesson you can highlight based on that success, particularly in terms of serving the needs of the African public, to serving their needs?
Yeah, I think I'd probably like to mention two things I think that have been key to our, let's say, relative success. It hasn't all been easy. It hasn't all been, wins. There's been tough times as well. But I think you're right. Over time, we've clearly created something that's significant at scale, having a positive impact both commercially and socially. And 5 million plus customers and millions of payments a day is sort of evidence of that. So what have we done well to be on this track? To what you said, we have always started and ended all of our product development focused on what our customers need. And we've done stuff that, frankly, globally is like different. Some people might call it bonkers. I'll give you an example. Our customers don't have to pay every day for their smartphones or their electric bikes. They're allowed to take a day off. And when they do take a day off, they don't have to pay for that day in order to get back on track. So there's flexibility built in. And let me give you...
Is that policy based on data analysis of the experience?
Well, I think it's been supported by data analysis after the fact, but at the very beginning, it came from conversations with customers, right? And here's the use case I'll use Lydia as an example. Lydia sells porridge door to door. And if on Sundays, nobody's buying porridge because everybody's cooking their own food at home, well, she doesn't need to use her smartphone on Sunday to go conduct her business. And so you don't want to force her to spend 40 cents that is very hard for her to afford on a product she's not going to use. So we say, fine, take Sunday off. And when you come back to Monday, she doesn't have the cash to pay for Sunday and then Monday again. So we said, fine, you can pay for Monday and your phone's going to work again. Now, this is all within sort of certain bounds. If she takes, every second day off, her credit profile with us is going to be not as, eligible for upgrades and everything else. But sort of simplifying the point, we have designed a lot of our credit approaches and products and payment policies against the needs of everyday earners, rather than, oh, this is what it looks like in another market, and let's kind of squish it onto Lydia, because that tends to break, right? So I think our strength comes from being quite brave in a way, to throw out the rule book and build a proposition from the bottom up that really speaks to the needs of Lydia, and then figuring out how the sort of business needs to operate to serve that need. The second thing is we have pivoted and continue to pivot and be agile. Maybe more than pivot, just be agile in adapting the business to changing circumstances. This smartphone factory I mentioned to you before, we didn't expect that a couple of years ago to be where we would be now. But the Kenya government, I think, made a very progressive decision and created policies to basically charge much more for imported finished smartphones and reward anybody who wanted to create local jobs to create smartphones. Again, we're a kind of credit-driven fintech, and many people would question, well, why would you guys wouldn't go build a factory, would you? I said, well, yes, we would. We happen to have some capability in the company that had done that in a different industry before, and we said, we're willing to do what it takes to get the lowest cost product in the right way. Other great benefits of creating jobs and everything else. So that agility is critical, and I don't want to lose that agility ever. Even though we have what is clearly a replicable, tons of growth, core business, our passion for agility and flexibility and responding to market dynamics and customer needs is core to our success, and will be core to our success for forever.
Jesse, thank you for your insights, sharing your insights with us today. And I also thank you for your contributions that you're making through M-KOPA.
Thanks, it's been a pleasure.
Thanks to our guest, Jesse Moore, and thanks to Paul Decker for stepping in as the guest host for this episode of On the Evidence, the Mathematica podcast. If you're a fan of the show, please consider leaving us a rating and review wherever you listen to podcasts. To catch future episodes, subscribe at mathematica.org/ontheevidence.